Well, I really wish there was something else to talk about because there's nothing to talk about with the government shutdown. The markets, I know that the press and the rest of the world really wants to point to it as a factor in the market. The fact of the matter is it's really not. Yesterday it was added to the psychology of a market that's in correction mode going into the last day of the quarter. Today we have an upside move, at least early on, because it's the first day of the quarter. Traditionally, over the last 30 years, the first day of the quarter has been an up day. It has nothing to do whether our government is functioning or not functioning. The fact of the matter is the government is the 800-pound gorilla in the marketplace, so it will have an impact on GDP readings. So the longer it goes on, the more significant. Depending on whose study you look at, it can be as little as 4 basis points to over 100 basis points on the GDP reading, depending on how long we stay. It's a la the Bill Clinton era where we're closed for over a week. So that will definitely come into factoring pricing in the market long term. But the event itself, again, is probably not as indicative of the last 2 days of trading, as it will have a greater impact if we should remain closed that much longer.
Most investors, though, are on the sideline because 17 days from now there could be a big market mover, and that's the debt ceiling. So that's what everybody's watching, because if they don't get that together, that could be chaos in the bond markets. But overall, we've had 15 at least other shutdowns in the history of the country. They've had no real lasting effects on the market.